Good evening, guys, and welcome to this week's weekly mentorship video, where we're going to look at a couple of pairs in the commodity that is gold, and also we're gonna look at NASDAQ 100. So yeah, there's quite a few there that I don't usually trade. We've got pound against Aussie dollar. NASDAQ, I don't usually trade NASDAQ, and we also have gold. So this might be of useful to people like Taffy. I know Taffy likes to trade gold, and a couple of other guys in the group. As for pound AUD, I'm sure Ronald will find this a bit insightful. So yeah, without wasting much of a time, I don't want the video to be quite long. We're going to start looking at gold. We're going to look at the precious metal, and from a monthly point of view, you can see that we are right now at a bit of an overbought conditions on gold. Market has really been on an uptrend of late, but that does not mean if it's overbought we're not gonna see further moves to the upside. As it is right now, my higher time frame bias on gold, I'm still favoring moves to the upside. Why would I say that? Because dollar is quite weak at this moment in time. We've got a weak dollar across board. So in regards to correlation, we are likely to see a strong what? A strong gold. So yeah, I'm just on a monthly chart here. I need to mark my points of interest. This is merely almost close as to not really equal, but they're not that much of a difference in terms of their price points. So those are relatively equal highs. So yeah, higher time frame bias. I'm looking for price to go to the upside. But like I said, I think in the last recording that I did mention that we are likely going to see phases where market either reaccumulates. For those that are bullish, we're talking of EURUSD, Pound USD, NZD USD, AUD USD. Our higher time frame bias on those assets is bullish. So we're bound to see reaccumulation in those assets. We are bound to see price seeking out sell side liquidity for further pushes to the upside. And I'm sure with gold, we are seeing that. That's the same thing that's happening currently on gold. So on the line chart, I'm just marking out my points of interest in relation to open and closing prices. Remember, the line chart disregards the weeks, right? And in most cases, you only do this on the monthly chart. Now, as you can see, this was our last down close candle. There hasn't really been much of a push to the upside last month, and we haven't really seen the current month expanding violently to the downside. Signs of reaccumulation, and you can see 1, 2, 3 current candles, the monthly candles. That's a mere consolidation right now. We don't have a clear directional bias. Price is just coming back into this bearish order block right here on the monthly chart. We're seeing price coming to that level and offering shorting opportunities. Those shorting opportunities are basically finding support inside this large range bullish order block, right? You can see here price came into that, rally to the upside, and we are now approaching, we have already approached the open of this last down close candle here, and you can see how price is finding a bit of support. Now remember, we cut through candles. using institutional order flow. We cut through candles. See here, right there, price comes to the open of this down close candle and it's moving to the upside. So we are seeing, I'm sure we are seeing a reaccumulation here for a further push to the upside. What is the target when we're talking of the upside? These relatively equal highs here, triple highs. You see, 1, 2, 3. So we're talking of 2075. So I would say we could see price head towards that level towards the end of the year. Remember, we are looking for shorting opportunities on dollar. Vice versa, we have to be hunting for longs on AUD, on gold. We have to hunt for longs higher time frame wise. So that means we are looking for price to come into discount, and once price is in discount, we're looking for discount areas that are going to provide support, and we then have to have a catalyst in the form of a fundamental that is going to push price to the upside. And the fundamentals can come most probably in a way of weaker dollar fundamentals, right? You can see the area that I've highlighted there. We've got the same price action right now. So you see, you should have those kind of anticipatory skills of seeing how price is finding support in discount or finding resistance in premium. So you can see the area that I've highlighted with an expansion to the upside, right? 1, 2, 3 candles here with an expansion to the upside. Then market consolidated for almost like 4 months, 1, 2, 3, 4 months. Then when they broke out to the upside, look what happened when price came back to the order block that was left at the equilibrium point. You see, that's our equilibrium point of this 4-month consolidation. Price comes back, it does not trade below the low of the order block. Why? Because the low of the order block ran stops. See, it ran stops right there. So there was no need for price to continue going to the downside. If we had seen say a new low here, the chance would have been very high that price is going to keep going lower. The same applies where we are right now. Inside this down close candle here, that's from so we've got August, we've got July low. We wouldn't want to see July low being breached to the downside. If that happens, it means the structure of this market has changed into a downtrend, and we could see something like this here, right? So July low should stay intact for the bulls to take control. So we are hunting for longs on gold. That's my perspective, right? If you have something that you need to discuss in regards to that, feel free, guys, to send me a message on the group, preferably like on the mentorship group, guys, so that someone out there who's also not having a clear picture can understand what's going on. So July's range, that means the body, right? I'm not going to classify that as an order block because we really didn't see an expansion to the upside, but maybe on the weekly or daily chart we are going to have an order block or liquidity void or favorably gap, things like that. You see, things that we can use to hunt for longs. As of now, on the monthly chart, there's only the bearish order block that's in control of price, and it's providing quite stiff resistance. And the open of February is also providing support, right? Because that's our higher time frame bullish order block. And when we go to a weekly chart, right, once we are on the weekly chart, right, you can see what we have on the weekly chart. So this should be July low, right? Let me expand this. So that's our July low, and you can see from there July low coming in at 1892.90. 1892.90. That level has got a huge chunk of sell side liquidity on offer, right? You can see right there, we've got this fair value gap, we've got this imbalance here, but I don't think we're gonna see price trade all the way. If we do trade all the way to this here, then we need to be aware of the fundamentals, because there could be an effect of price breaking lower and continue all the way to this level here. Now remember, this is gold. Gold can move. It can move 2-3 weeks and close these gaps. So you can see we've got our fair value gap, sell side liquidity offered on the low of June. Right. You can see price did rally to the upside into our monthly bearish order block, and for the past 3 weeks price has dropped, 4 weeks I mean, price has dropped from that order block for a return of almost 463 pips. You see, that's the advantage of using higher time frame premium and discount areas. Once price respected, it can literally move. So now, how then do we define, right? Yes, we've got the order block, but currently you can see price is in an uptrend, and we've got this range here from low to high. See that range from low of February to the high of April. That's our range. Look where the premium, the discount zone is coming in at 62% and below. So we wouldn't want to see price trade below 1892, or we can roughly say 1900. If it trades below 1900, we need to validate a run of stops below, because we've got liquidity down here. See, we've got liquidity down here, right? That's higher time frame liquidity, but we should see price face quite a huge support around the 1910, around the 1910, 1920s. You see, around those price point, around 1920s, higher 20s, we should see price find a huge support. So on the weekly chart, we're merely seeing reaccumulation here. You can see the down candles there. They are not standing any chance. The bears can't even erase the gains from March on gold. The bears, they can't even erase the gains from March. So that's basically price action showing you that it's reaccumulating for a further push to the upside. Eventually we are going to see like huge expansions to the upside, targeting 2075. So on the daily chart, once we get to the daily chart now, you can see the 1920s I've been talking about there. That's number one. That's our daily bullish order block. You see, you can define again another trading range here from this low to this high. You see, that's another range. Look where the optimum entry is coming in at, right here at 1920. You see, 1920, 1912, 1910. Those are all your ideal areas for long entries when you go to the H4 chart. If we do break below 1900, then expect price to trade all the way back to test the 1820s. You see, 1810s, 1813, 1850s. Chances will be very high. You see, but as it is right now, this is just a mere reaccumulation for a further push to the upside. Once we break above 1987, then there's nothing which is going to stop gold to retest 2012, 2045, and ultimately 2075. So that's gold in a nutshell. obviously, if you are going to trade it, if you are trading gold, then make sure you do a detailed price action analysis, do your technicals properly, and have targets. You can see here all the highs. These will be initial targets. If you go on the daily, right, let me go back to the daily. Any entry, say around 1920 or 1912, right, any entry above that, your target, your initial target will be the old highs, say of Friday's high, or these two daily bearish order block pulls. They will provide resistance, you see. So ideally you need to be hunting for longs on gold from discount areas on the weekly, daily, and monthly chart. And I've already highlighted your daily discount array in the form of daily bullish order block here, the one around 1912 and 1910. 1920 will also be an ideal long entry price point, but the only downside to it is you're going to have a huge stop loss. Your stop loss is going to be quite big. You're looking at about 200 pips, and that's a lot in regards to gold. So yeah, ideally you need to be hunting for longs on the precious metal. So now let's look at USDJPY. Right, so USDJPY, higher time frame buyers, we are short. We're looking for shorting opportunities on UJ. I'm sure I've got a price action that I marked on this chart here. We're looking for shorting opportunities. All these levels have now been violated. I'm sure you remember when I did this. These 1, 2, 3 candles were non-existent, and we were targeting price to reach this monthly bearish order block, and that is ultimately happened, right? So we are now looking for moves to the downside, targeting what, your internal range liquidity from this low to that high. We're looking for price to go lower. All right, so let me just have a clean chart on the monthly. So we've got our monthly bearish order block, which is in control of price. Price is respecting this OB. And what is our range in terms of trading? We've got the high to the low. Remember, the high to the low is your expansion, where the market is showing you its willingness to go in that direction. Like for instance, you see, higher time frame wise, we had these 1, 2, 3 drops in UJ, right? Initially from November 2022. That's smart money showing you its willingness that it wants to go lower, right? But then where are you gonna jump on board on this same price action? After a redistribution. Remember, market is bearish, so it's going to redistribute on lower time frames. This one is a redistribution into fair value bearish order block. You can see 144.63 optimum trade entry of this expansion, and price did drop. You can see last month it quite dropped. UJ did drop quite a lot, 743 pips that it dropped last month. UJ gained almost like 5% from the highs of June. From the highs of June, UJ dropped quite big time. And I remember on the weekly chart, I did send a weekly bearish order block. I don't know if you guys followed through, but I'll show you in a moment. So yeah, higher time frame wise, we are looking for UJ to go to the lower side. We are looking for bearish momentum, bearish expansion. This is the order block I'm talking about. See, if you go on the group, there is a chart that I sent with these 2 candles only before everything here to the right has happened, and you can see where price came right onto OTE, high to the low of the expansion. You see, high to the low. Market is bearish, it's high to the low. When market is bullish, low to high. For you to measure your range in order to find your premium area, your premium zone. I mean, you see, okay. I don't need this one here. Let's get rid of that so that the chart is a bit clear. So you can see this is our expansion. That's smart money showing us its willingness to go lower, right? These two bearish candles here. Price had filled this liquidity void here and now move to the lower. So where would you likely be a seller on UJ? Anywhere above 142 point, yeah, anywhere above 142, as long as the fundamentals are aligning. You see, anywhere above 142 and between 143.41, you need to be a seller on UJ. So hunting for shorting opportunities above 142 is an ideal scenario, right? So on the weekly chart, we've got our bearish order block. What will be your target? These lows here, you're targeting 137, right? That's your target, 137.20. That is your target in terms of shorting opportunities that you take above 142, right? Now you can see here, this is a run-off stop. Take note, guys, this is a run-off stop in premium zone, right? That's a run-off stop. So this is Monday, Friday, Thursday. Thursday's high did run stop in fair value. Let me just make this. I always like my line to be straight. I don't like lines that are curved, right? So if that's a run-off stop, right, where then do you anticipate to go short? 142.74, 143.41. You wouldn't want to see price trade above this level here. If it trades above 143.88, 143.88, if price does trade above that, then you're looking at this daily bearish order block to provide what? Resistance for a push to the downside. Because you can see a consolidation, boom, market expands to the downside. So let's go to H4, our entry time. You see, there you go, guys. You see, it's not rocket science. You see that order block there? We've got a fair value gap here, high probability bearish order block right there. You see, high probability bearish order block. We also have one here. You see, that's a bearish order block, and price is now there. Remember, we are bearish. So this bullish order block here, you won't look for it as a long entry. You are going against your higher time frame bias, this bullish order block. You see, if you find yourself looking to go long inside this daily H4 bullish order block, then something is not right, because you can see what happened here. See, this is an H4 bullish order block. Did price offer any opportunities? No, it didn't. It just broke and went to the downside. You see, price broke and went to the downside. So here, like on this H4 bearish order block here, you need fundamentals here. Say negative news for dollar, right? When price is inside this zone, negative news for the dollar, price will go lower. Anything positive for the dollar, then price will keep pushing to the upside. So now your high probability zone for shorting opportunities on UJ is 143. Let's see right here, this level here. So we're talking of 143.20. I'm just gonna round it off to an institutional price point, 143.15. 143.15. That would be a level that you're looking for market to go lower. So yeah, shorting opportunities are ideal on UJ. Then on EURUSD, obviously we're looking for longs, right? We are likely to see another high formed by end of year on EURUSD, right? So yeah, we always talk of this pair here in detail, right? So what I'm gonna do is You already know our bias on Euro USD. We are bullish. We're looking for market to go higher. Look how this bearish order block did not even provide any resistance. You see, that's a market showing you its willingness to go lower. Down candles, these are basically reaccumulation. Reaccumulation what? Another push to the upside. You see, down close candle, push, down close candle, push. You see, ultimately most of the goals have been reached here. So we're now looking for an impetus for us to also go long. That is, we need price to come back into discount for a push to the upside. Where is that discount? You see, I've just gone to the weekly chart and I've seen this imbalance here, right? That would be the likely source of longs to the upside. Negative news for the dollar when we are here, positive news for the euro when we are here. Price should push to the upside, targeting what? Last month high. See, because there is liquidity above last month high. So focus on the imbalance, focus on this fair value gap here when we go to the daily chart. Right, there we go. We've got our order block right there, just above the imbalance, right? Just above the imbalance, we've got our order block, and you can see the imbalance on the daily, it has been filled, right? So don't be hunting for shorts, say on this bearish order block here. Yes, you can, but it will be a scalp. You can, but it will be a scalp only backed by negative news for euro for you to short it here, or positive news for the dollar for you to short it there. Other than that, no, you need to be looking for longs from discount. Boom, daily bullish order block. Boom, weekly inefficiency. See, those are the levels you're looking for longs. Targeting what? Last month's high coming in at 1.12750. See, so I'm not going to go into detail on Euro USD. Most of you guys should know Euro USD by the back of your hand now. So it's just a case of defining your discount areas that you are going to go long on. See here, we've got that H4 bullish order block. If price does come back to this level, like what we saw here, it was almost, I think we've got a gap that has been filled there, right there. You can see price did fill this candle's high and this candle's low. Yeah, there's still a gap between this candle and that candle. There's still a gap, but you can see how price did find support because price was already in discount. Why do I say price was in discount? Check. Grab your fibs, low to high. The low to high is your expansion. The market showing you its willingness that it wants to go higher. That's the expansion. So where would you be in a position to jump in? Check. Optimum trade entry at 1.09658. Boom, market expands. For the last 12 hours, market is expanding from optimum entry to went as high as 46 pips. See, that's how you should be looking in at the market in relation to your bias. I'm not gonna measure this expansion here from this high to this low because it goes against the higher time frame bias. You see, it goes against the higher time frame bias, which is bullish. We're looking for longs on Euro USD. Then we also have USDCAD. USDCAD, we're looking for bearish. We're looking for shorts on USDCAD. We're looking for shorts from higher time frame premium areas. We're looking for shorts targeting higher time frame discount areas. So for CAD, we should see price trade. We should see price trade below 1.30 in the coming months. We should see price trade below 1.30 in the coming months. From where should we be targeting that range, that price range, right? That's from premium. And you can see price is crippling to the downside, right? Up close candles are being made by violent down close candles. See, huge expansions to the downside from premium, right? So we've got our monthly bearish OP here. That's our monthly bearish order block. See? Now remember guys, when I do this forecast, I do them in a way whereby eventually you as a trader, you have to now go dig deeper and try to understand the currency pair. For instance, let's say Ronald gave me UJ, Euro USD, and Pound AUD. Once I'm done with say Pound AUD, I'm gonna give him a skeleton view because I cannot go all the way into detail. I can give you a guideline for you now to be hunting for further evidence to support that guideline. If you see yourself having thoughts of looking at it from the other opposite side, then validate that. You see, validate those points so that you can come up with trades on that asset. So USDCAD, we're looking for shorting opportunities from premium areas. So now you can see our monthly premium area is quite a bit further to the upside, meaning we need a weekly premium area. What do we have on the weekly? We've got this bearish order block. Now check in this expansion 1, 2, 3. You see that expansion? It was made by what? A consolidation. See, the market expanded to the upside, took out the highs of the consolidation. The low of the consolidation is still intact. Where's the low of the consolidation? Right in here. See, these are now targets. See, because these are all discount areas. These are targets for your shorting opportunities. These are all targets, right? So if these are all targets, where are you likely to go short, right? Remember, the white shaded area, that's our monthly bearish order block. The gray shaded area, that's now our weekly bearish order block. And you can see we had this expansion here, right? You can see it repeats itself. This expansion, redistribution, expansion, redistribution into fair value. What is fair value here? This bearish order block. You see? Remember, fair value in bearish markets comes in the form of premium areas. Then expansion, redistribution, expansion. So we're looking for price from this high to this low. Where is our premium level? Right above the 62% and all the way to the 69%. That's our premium zone. And what areas are in that premium zone? We've got a high probability bearish order block here, just above 134,800. You see, that's your ideal area for shorting opportunities, above 1.34,800. You see, that's when you have to now look at the calendar. What is on the calendar that can give us a move to that level? We've got CPI coming in for the United States, and we just have to wait and see how that affects the market. But yes, above 1.34800, that's your optimum entry for shorting opportunity with a stop above 1.36. You see, I've already given you a skeleton view. Now you need to go to lower time frames. Now lower time frame, see there, right at the start of our premium zone, we've got a daily bearish order block. See, that's a daily bearish order block. Redistribution into fair value. See, redistribution into fair value. Boom, market drops. Same thing is happening right now. Target is 1.30927. That's your target for shorting anywhere above 1.34400, right? 1.34400. 1.34400 might not really be ideal. 1.34400, it will be too early for shorting because price will likely, my PDA will likely need to fill up this imbalance here. Too much of a gap in this liquidity void. You see? So the way price reacts, the way price behaves when we are above 1.34395 will determine whether we're shorting. Now, what kind of a price action do you need to see there? A run above and close below. That's what you need to see. A run above and close below. Like this candle here. Run above, close below. This candle, run above, close below. Then you know price is going lower. Run above and close above, then wait for price to reach 1.34800 or even 1.35. You see, for your shorting opportunities. So that's on USDCAD. Then we also have pound AUD, right? Pound AUD. Let me go to the class profile. Pound AUD. Now, this one is going to be a bit tricky for most guys, but what you need to understand now, when you're doing cross pairs, this is a cross pair. It's a minor pair. It's not a major pair. Now, cross pair, remember what you do in defining your bias, right? So we need to use our macro perspective on this one here. So I'm going to go to investing.com. I just need to check the interest rates for the two countries, right? So for pound, we're looking at 5.25%, and then AUD, which is RBA, we've got 4.1%. You can see the difference in those rates. Yes, quite high. There's a difference here of almost 1.15%. That's quite telling. It's not like, say, the Fed and BOE, where there's 25 basis points only, or say Bank of Canada and Bank of England. Same thing, we've got a difference of 25 basis points. But now when you look at Bank of England 5.25 and RBA 4.10, so we've got a higher rate country versus a low rate country. You see how I'm approaching the whole thing, because it's a minor pair. It's a currency pair that I haven't traded before. So I'm going to use the interest rates to determine my higher time frame bias. Higher rate country versus a low rate country, buy, bullish momentum, right? And if you go to pound CAD, you can see price is in a bullish trend, right? Now on the monthly chart, we've got there our bearish order block. Price has recently broke above this high here. See, this is now me doing my price action analysis. So price did broke above this old high here, broke above, come back, broke above, came back, and then currently we're trading above that high, right? Price is above that high. What's gonna stop price to reach out for 1.96800? I don't think there's anything, right? Because our interest rates differentials are already telling us that pound is gonna gain against the AUD, right? So what you need as a catalyst, positive news for the pound in discount zone for a push to the upside. In this current candle, see the current range, there's an expansion there which you can use to define your discount range, but we already have a discount area here in the form of an old high. Control C, Control V. So 1.92203. See, that's an old high, right? You're looking for price to come back to that level and push to the upside. It would be nice to see this candle close above, because that would be a bullish breaker. See, like what we saw here, bullish breaker, price comes back and pushes to the upside. So higher time frame bias on pound USD is bullish, you need to be looking for longs, right? So I don't trade cross pairs. I'm sure by now you know that, guys. I don't trade cross pairs, so I'm not gonna waste much of your time here. I'm just gonna do like define the higher time frame bias, which is bullish. So you need to be in a position now to go onto lower time frames. You see, now this is a weekly chart, right? Weekly chart, we've got imbalance here, right? We've got imbalance, fair value for longs, right? Fair value for longs, that's on the weekly chart. When you go to the daily, right? So this is the daily. You can see why I don't trade minor pairs. The price action is quite distorted, if I may say, if it's the right word to use. Price action is quite distorted. Order blocks are like one after the other. See, one after the other. Even this big range candle, once this candle closes above, this becomes your OB. You can validate it as an order block, you see. So those are all the areas where you can be hunting for longs, Ronald. Inside that trend, you can see that we've got imbalance. We have this imbalance here. Price came into that level, then now it's expanding to the upside. So you need to really look into this currency pair and define your structures, define your discount areas, define the premium areas that you're going to be targeting in terms of your take profits and all that, because they will provide resistance. But the most important thing is to define your higher time frame entry zones, like this daily bullish order block that I marked 1, 2, and 3. Those will be ideal for you to go long. Then finally, we've got NASDAQ, right? NASDAQ, I haven't looked at NASDAQ in a while, right? But yeah, you can see price has reached now overbought scenarios, and we could see most probably a move lower, right? We could see a move lower to the downside, right? So this is an old premium area, right? We've got fair value here. This would be ideal area for you to go long, targeting these old highs, targeting 16690 from this level here, this imbalance right there. So yeah, I would say long trades are ideal on NASDAQ, but you need to exercise a bit of caution because we are in overbought scenarios. Market has really been overbought on this index, you see. So this white area here, see, this is a breaker. Price comes back and is pushing to the upside. We still have this zone here, you see. So yeah, expect NASDAQ to trade to the upside from discount zones. Already there's one here, see. That's your bullish order block. Come on with a fair value gap, high probability. And this is the beginning of this week, you see. So if we do get a move lower, then expect this old high here to be targeted by the buyers right there. Expect that level to be targeted, and we're looking at it of 15,947, so 15,950. Expect even 1600, let's just say 1600. Expect 1600 to be the draw on liquidity. So longs are ideal, targeting 1600 from this bullish order block here, or from this imbalance on the monthly chart, right? The white shaded area, this is just a weekly chart, but the imbalance is on the monthly chart, right? Let's see what it looks like on daily, right? So this is our daily bullish order block. Yeah, so I think 1600 is quite an ideal target for longs on NASDAQ. But if we keep moving lower now, you see, this level should provide a huge support on price for a further push to the upside. I'm just going to go back to the weekly chart. Just want to see something. Right, so boom, that's an expansion. See, low to high, that's an expansion. Price here is in discount right now. We're in a discount. Price is in discount zone right now, and ideally you need to be hunting for longs on Nasdaq, especially if price does come into this crash-rated area. See here that imbalance there. Ideally, that's a very good area for you to go long. So yeah, I'm not sure if I missed something. Right, AUD USD, AUD USD. So we're looking for longs here. AUD USD long opportunities from higher time frame discount zone right there. See, that's your monthly bullish order block. We've had an expansion and the bearish order block has provided what? Resistance and price pushed down. Now, why am I saying price is in discount right now? You see, yes, we've got a bullish order block, but what else do you see, right, in terms of the market telling you that it wants to go higher? This expansion here, you see, 1, 2, 3 candles. This expansion here, if we are to place our fibs low to high, yeah, low to high of the expansion, see the low to high of the expansion, check where the bullish order block is. It went right onto your optimum entry, 0.64598, 0.64598, and price did find support. So prior to this expansion being formed and then you get market moving lower, you'd have already noted that, okay, market has shown me its willingness to go lower, to go higher, I mean. So where is the ideal area for me to go long? Here, 62% retracement level and the optimal trade entry, and both price points are reached on the monthly chart. Now what's the difference in terms of, there's a 100 pip difference, right? Now inside this down close candle here, when you go to a lower time frame, you will definitely get lower time frame areas, and you'd have had this imbalance here. See, this candle's low and this candle's high. Price comes into that level, boom, 62% retracement level, optimum trade entry 70.5. This would have been your points of interest in terms of going long, right? So once price reaches there, you're ultimately looking for longs into that area, and that's where we are right now. We are right at the 62% retracement level. That's another reaccumulation. This is reaccumulation, 1, 2, 3, 4 reaccumulation into fair value. Boom, market pushes to the upside. Where does it push to? Premium zone in the form of a bearish OB. But prior to that, market would have offered you like 400 pips. See? So right now we are again back into discount, reaccumulation again. Go to the weekly chart. What do we have on the weekly chart in terms of our arrays? We still have that monthly bullish order block, but on the weekly there isn't really nothing much. See, there isn't really nothing much. So this premium area here will only provide what? Resistance. Provide you exit options for your longs, right? So let's go to the daily. That's the daily chart. Remember, this is AUD USD. We're looking for longs on this pair because dollar is weak, so we are looking for longs. Look where price came into last week on Thursday. Look at last week's low. Last week's low came in at 0.65131 and the market pushed up. Let's go to H4. Minimize that. There, H4 bullish order block right here. There, that's your H4 bullish order block, and market expanded for 91 pips. So right now you need to wait for price to come back, preferably to 0.6545 or even 0.64598 for a much better opportunities for a push to the upside. So yeah, longs are ideal on AUDUSD and preferably from a higher time frame discount array. It can be a daily bullish order block, like in this case here. In this one, it's got OTE on it. Yeah, this level should be tested. You see here, this was your first test, right, of this zone of the OTE, and price rallied. We should see another test of that zone. Right? We should see another test, and once we trade below it, we need a price to close above, and that's your trigger for market to go to the upside. So yeah, that's pretty much about it, folks. I've covered gold. I've looked at UJ, EURUSD, Pound AUD, and also USDCAD and AUDUSD. So I hope this is going to help you. I hope it has been insightful and it will help you in your analysis on the currencies that you are looking to trade. And for those of you who have any questions, you can reach out on the group. You can send a message on the group, and I'll be gladly be here to assist. So yeah, it ended up being quite a long one, about 51 minutes, but yeah, what can we do? It's a Monday, and of late I haven't been doing these videos because I need you guys to be in a position to look at these charts by yourself and come up to a decision to say, okay, I'm gonna go this side, I'm gonna go this side. And make sure whatever decision you make, your trading decisions that you make on any currency pair, make sure it's in relation to your higher time frame bias, and you've got a fundamental to back it up. You see, look what happened with dollar index. I think it was last week. Was it last week? Yeah, I think so. Yeah, I think it was last week, if I'm not mistaken. Last week Friday. Yeah, last week Friday. We had negative fundamentals in the form of NFP. Look at that expansion. And if you go on to say H4 or daily, right, you can see that expansion came about when price was in premium. See, price was in premium right there, right? Fair value gap was filled, then boom, market expanded going to the downside. There was a catalyst now for price to push lower, and that catalyst came in the form of NFP. You see, that's how you have to approach these markets, and with your higher time frame bias in the picture. So yeah, that's pretty much about it, folks, and I hope it has been insightful, and I wish you good luck and happy trading, folks. Thank you.